Okay, everybody, it is me and you. Me and you. And we are here to talk about this freaking thing that we are involved in. So let's do that. Let me start off with this. Right now, stock trading doesn't start for about 40 minutes. Stock futures are slightly lower, at least for the Dow Jones Industrial Average and the S&P 500. NASDAQ futures are slightly higher. So it looks like a mixed open here. Let's move forward. The dollar is slightly stronger. You got a little pressure here on the 10-year yield. Why? Hold that thought. Crude oil is catching a bid here. Cryptocurrencies are getting a bit higher pretty much across the board. Bitcoin is 18,285. And that's pretty much where we stand here. Gold and silver are also catching a bid. So with regard to what we're seeing now in the debt market with the 10-year yield dropping a little bit and the dollar stronger, well, there's some kind of a game being played. And I want to outline that just real quick. It seems that the Treasury Department is seeking to cancel some of the Federal Reserve's loan programs, which amount to about $420 billion. Well, you would imagine that this would have some kind of a negative effect on the market. However, first of all, I don't believe it. That's number one. Number two, you got, beyond any doubt, trillions of more dollars that are going to be borrowed into existence, just moving down the line a little bit. So I don't think the market is going to react very negatively to this if stocks do drop today. I don't believe, and that's a if, okay? This market is in freaking la la land. It's a freak show like everything else that's going on here. Yesterday was epic. We had the market under pressure all day long until they floated out this story that the Congress was going to start to talk. They've agreed to talk about stimulus. Well, guess what happened this morning? We found out that, well, maybe not. This sounds really like the China trade deal. Yeah, no. What is this? They're stringing the people along. It's all a game, and they want people stressed out. Period. The end. That's exactly what they're trying to do. It's part of the mechanism here. To destroy whatever's left of the middle class, and our country's going down the toilet. It's been going down the toilet for a very long time, and they're just waiting for the final flush. And this is the Federal Reserve. I don't care what comes out of the mouth of Steve Mnuchin. Steve Mnuchin is a criminal, okay? And he's a liar of the highest order. So if he's coming out saying, oh, okay, we're going to cancel these programs from the Federal Reserve, do you buy it? No, I don't buy it at all. I don't buy anything that's going on here. All I want to do is capitalize on the nonsense that's happening around us. And this couldn't be more simple. I don't care what comes out of Steve Mnuchin, his mouth. The man has got an agenda here, and he's just playing with people. He knows for a fact that debt is the only instrument supporting this market. Maybe he wants to, I don't know, he doesn't want to do anything because he understands also that trillions of dollars is coming in the form of stimulus eventually, and the Federal Reserve is going to continue to buy all the debt. Sure, maybe Mnuchin wants to cancel some of the loan programs that would possibly have helped U.S. small businesses because he doesn't care about U.S. small businesses at all. He's all for the corporations and the Wall Street banks. That's who Steve Mnuchin works for. It should be obvious. So, it's part of the mechanism here to destroy whatever's left of the middle class. Thank you, Steve Mnuchin. That's what he's doing here because the Fed is going to keep juicing the markets. Juicing. You remember who Fed Bostic? Oh, the Federal Reserve still has juicy tools. Juicy tools. I'm not making this up. This is exactly what he said. Look it up for yourself. I posted links to this. This is just a couple of days ago here. And then we got Fed Mester yesterday explaining that accommodative monetary policy is going to last in perpetuity. And she wouldn't even speculate on whether or not the Fed was going to increase asset purchases coming December. Come on. I don't care, again, what comes out of the mouth of Steve Mnuchin. The man needs to have duct tape placed over his nose and mouth. He's public enemy number one as well. There is no doubt in my mind, and I'm certain that if you have even the slightest idea of what Steve Mnuchin is about, the current Treasury Secretary, you would have to agree. All right, so in summary here, market is set for a mixed open. 10-year yield did drop, dollar stronger. That's market negative. Crude oil is catching a bid. That's positive. We'll see. We'll see how this plays out. But Bitcoin and the rest of these cryptos continue to skyrocket here. Gold and silver, again, catching a bid. But I'm just going to say it again. There is no price discovery. It's so rigged. The price action of gold and silver, honestly, is the most rigged part of this market, bar none. Look at this. You got what? The Fed's balance sheet, 4.1 trillion in March. It's now over 7.3 trillion. And gold and silver aren't doing anything. These are anti-debt units. Are you kidding me? Are you kidding me? But again, the rigging, the manipulation will continue, along with the distractions, the fakery, the fake news, the propaganda, and everything else that's going on. So remember to stay distracted. All right, with that said, I'm going to let you all go. I got work to do before this market opens. Please share the video, and I'll see you later.